Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 7, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, Mrs. Market continues in a grind up, melt up operation. Another new high was made today. You see the horizontal blue line on the screen above current price. It sits at 516.65. We have that on the screen for a while. They didn't quite get there today. They came somewhat close. That is a mathematical formula-driven number. There is no other point of reference, but that is the next number I have in the sequence if they continue to rise. Now, what's tomorrow? Tomorrow, I believe, is the phony jobs number. They can move the tape in either direction. If they're looking for another excuse to continue the melt-up operation into a Friday floater operation, so be it. They'll hit that number, and that doesn't have to be the end. They can pull them back. Can they pull them back on the phony number before the market opens? Absolutely. Guess what we have on the board today? We have a Shenanigans tail candle. You see that arrow pointing to today's tail low? That today tail low on the daily chart comes in at 509.81. Just for fun, we're going to mark that off on the chart, 509.81. You go down to an hourly chart and you find out, hey, wait a minute, they never got close to that number today. That by itself creates what we call a Shenanigans tail candle. What is that? Well, you see the daily chart. The tail says the low today was 509.81. And guess what? It wasn't. So there's some shenanigans going on, which means either price will be there sooner than later or something else sinister is going on. But you can see from the daily chart perspective, we have a Shenanigans tail candle, and the official low of day today in real terms is 512.18. What else do we have on the docket? Well, we go through this 4 times a year, once a quarter, and you'll remember I say during the contract roll, in addition to regular way options expiration week, but more so during the contract roll, when the futures contracts roll from one quarter to the following quarter, meaning the June quarter, the month ending or quarter ending June next week will be the front month contract. March is now the outgoing contract. Weird stuff happens around the roll. We've seen it over and over and over again. Just so we can get an idea of what we're up against, here's the June expiration contract. It's the M contract, as in Mary, ESM 24. And you can see here today's closing print is 5,219 or 18. They're still trading out here. And when you compare that against the current contract, that's at 51.55. So there's another, and we've seen this for several quarters in a row now, a big gap, a big disparity, a large price differential between the incoming contract and the outgoing contract. In this case, it's about 53 points right now. That's a large spread. Expect weird stuff to happen. Anybody make money today in the live room? We had a nice juicy short trade right out of the gate. It wasn't a big trade, but it was a nice, quick, and clean trade. And then I'm going to show you a bounce back situation in a moment. So we had a happy Thursday. They had an opportunity to sell them off late last night, but they didn't do it. They bounced back. The bulls are in charge, and from an overhead resistance standpoint this morning, we had our trend line, which you already saw on the screen, came in right around 512. Then we had 512.90. They're both magnetic and overhead resistance. Let's scroll forward. Let's see what else we have as the day starts to get underway. Continuing the melt-up operation, thieves in the morning were jamming price up. 512.90 is the next important spot, which is magnetic and overhead resistance. Above 512.90, you have 513.50 and then the all-time high. And basically that creates a zone between 512.90 and 514.20 of overhead resistance where there should be a pullback in the other direction for a scalp with potential. 512.90. There's the two numbers that were on the board early, 512.90, 513.50. You could see what happened. They went right into them, right out of the gate this morning, had a nice juicy pullback toward the trend line. The trend line is support. They broke out above the trend line, and therefore coming back to pay a visit from above is support. You could see here, this is a classic move today. They gapped above the trend line, came right back for a quick test, successful test. They stayed above the trend line. That's bullish, and they ran higher for the rest of the day. That is a bullish move. Write it down, put it on a sticky note. They came back to retest the area they just broke out above. How many times have you heard me discuss this each and every day? Whether it's in these videos, whether it's in the live trading room, either way, that is a classic move. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. Today was not necessarily a trader's type of day, at least where there was one trade early in the day in the spider, but when they're on a grinding melt-up operation with low participation and low volume, it does not make for a trader's type of tape. We accept the market she presents us each and every day. We do not ask questions, we just move along. Stocks on the move, we had 3 on the board today. We had Sienna, Tesla, and FL, which is Foot Locker once again for the second time. Tesla didn't get to its number, nor did Foot Locker, but Sienna did, so we'll take a look at that chart. Sienna getting its buzz cut at the open. You see the 3 numbers on the board. They cut through the first 2 like a hot knife through butter. They were headed for the third, spiked the third, turned right around, ripped it back up in the other direction, and provided traders who entered this trade, specifically in the live room and inside the numbers, handed them a double, stand-up double, having reached over $55 in a matter of minutes. Quick and painless. Let's check in at some of our favorite stocks. We'll check in at the Fab 7. Here's Amazon, and you can see 176.85. We talked about that target. They got there. They spiked it. They're still hanging around at that number. It's in an uptrend. There's nothing wrong with Amazon. When you look at the weekly chart, same routine. They're just extended from home base. We know about that routine. So eventually expect a pullback. We're not going to guess where. We're going to wait for a sign and or signal of a trend change. They morph from shorter time frames onto larger ones. We do not have anything of the sort right now on the daily chart. They're above all the moving averages. They're grinding up, and we take it at face value. What about Apple? Apple's still struggling. Apple hasn't got a decent bounce in a while. Apple's headed to a number. I think I have the number, and if they get to the number, there will be a swing trade issued for Apple from the Lazy Swing Trader, the Lazy Swing Trader Automagical Algo System. Speaking of which, we had another exit today. We had an entry at 77.75 for AFLAC, AFL. We had the exit today, profit target 82.50. You could see what happened. That was certainly overhead resistance today. It pays to know your numbers for not only exits, but also entries. Lazy Swing Trader Automagical Algo System. Another base hit in our pocket. Back to the Fab 7. What about Mickeysoft? Now, Mickeysoft has made a lower high, so that's interesting. So let's mark this off. We have a high, and then we have a lower high. That doesn't mean Mickeysoft won't go back up. When you look at the weekly chart, they're above all the moving averages. They're just going sideways, eating time off the clock. But from a daily chart perspective and a scaled down version, we do have a lower high, so therefore she is susceptible to fall. If she gets below yesterday's low in the 50-period moving average, the next spot down is about 389 to 385. In Microsoft, write that down, put it on a sticky note. There will be a bounce between 389 and 385. Intraday traders from the live room and inside the number perspective will have a more granular and specific number if they are falling. What about Mother Google? Not exactly like Apple, but not dissimilar to Apple. There are issues with Google in particular. Last line of defense, the 200 period moving average, they're fighting it. This is at least on a daily chart. You look at the weekly chart and they're into the 50 period moving average. Almost there, came up short. Big picture, this is a pullback in an uptrend as long as they hold the 50 period moving average on the weekly chart. Give that up, different situation going on in Google. How about NVIDIA? How about Monster NVIDIA? Where are they going? 950, 1,000, above 1,000. It's relentless. It's a melt up. It's FOMO. Everybody's got FOMO for NVIDIA. They're too far from home base. Doesn't mean they can't get higher, but they will pull back when you least expect it. You'll wake up one day, they'll have tugged the rug a little bit, and they'll be down $30 or $40 to start the day. That's just the way these things work. They don't send you a memo in advance. They don't flash a red light. There's no text message ahead of time. They just do it. From where is the trick? Meta is also on a melt-up operation. New highs, grinding melt-up, weekly chart, obviously too far from home base. They will come back down to pay a visit. Again, same routine. Question is, from where and when? And let me reiterate one more thing that we discussed the other day. I think it's worth bringing it back to the forefront. Cycles. Markets trade up into and down into these tinfoil hat events. We do have a tinfoil hat event coming. We're going to call it a range between March 20th, March 19th, 20th, all the way through to the 24th, 25th. In that range is an area where if the market is trading up into that time frame, we will be on the lookout and raise our awareness for a potential turning point in the market. Write that down, put it on a sticky note. Nothing's changed. Tesla, here's the weekly chart. You can see how they're grinding down below all the moving averages. The trend is your friend. Certainly not the bull trend, but the bear trend. Same thing on the daily chart. I have a number in Tesla, just like Apple. It's on the swing trade list. When they get to the number, there will be an alert, and we will expect a reversal back in the other direction. They're not at the number yet. They're not that far. They're headed somewhere. They're headed to a destination. They will get there. Patience pays. This is a patience business. Write that down twice. What about the IWM? Camp IWM, that is. Still grinding up. Poked a new high today. Pulled back a little bit. No big deal. No revelation. It's in an uptrend, and the trend is, in fact, your friend until your shit gets heave-hoed out the window. Decent up day for the folks down at the transportation department, up 1% today, recapturing the 20 and 50 period moving averages. Above all the moving averages, trend is your friend. Where the weekly chart, same routine. We talk about this each night. They're above all the moving averages. You got a box here that's just eating time off the clock, above all the moving averages. This is a bullish scenario setting up for the next move higher. That's what this chart is doing. Doesn't guarantee anything. It's taking it at face value. That's it. What about the Q people? Grinding up, new highs again, above all the moving averages. Trend is your friend. You could see where the weekly chart is. It's getting a little bit far from home base again, but you could see new highs. They're grinding up. The trend is up. It's a melt-up operation until such time as they put in, like all the markets, a sign and or signal of a trend change. These are things that are right out of the course. Lazy E-mini trader. Once they do that, it gives the trader, gives you and me something to trade against. If we want to take a short trade at new highs, we have to have something to trade against. We have to know where we're wrong. We have to be able to pull the ripcord so that we don't let a small loss become a large loss. The objective in the trading business is to keep our losses, which will happen, it's part of the business, small and fast. When the facts change on the chart, so does the trade. How about the XLF? What did they do today? They finally got to the next place, 40.80. And what happened at that place? Well, from at least a short-term perspective, they did get rejected. 40.80 was that target. How do we know that? Because I told you that weeks ago. We'll issue that one a funny how that works. About Smashmouth, Philadelphia Semiconductor Index, they're just on a tear. Another big up day, new highs. Again, it's just a runaway, same routine. You let them go until they show you something different. What are they going to show you from here? Some kind of trend change in the making. If till they do, there is no trend change in the making, and it's a continued melt-up operation. Nothing more, nothing less. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.